Hi there folks, welcome to this week's weekly trade ideas. It's Monday the 7th of June. So last week, busy week for the US dollar. For those of you that are following the markets, you would have been aware of the US job numbers, the non-farm payroll released on Friday. Now the previous month there was a big miss in this. It was basically expecting 1 million jobs, came in at 266,000. So all eyes were keenly watching this week's data. And in the build-up to the release on Friday, the markets were getting quite excited. The US dollar was getting well bid as the expectations were that more jobs would be created. There had been a good recovery from the previous month's data. Unfortunately, the non-farm payroll numbers, they disappointed yet again, came in much lower than expected, certainly much lower than the run-up where they saw the numbers, the analysts predicting up to 850,000, came in just shy of 550,000, something around those levels. So a big miss. Now, why is this important? Well, it is important because job numbers gives us early indications, early clues on the state of the economy. And of course, everyone's talking about yields and interest rates at the moment. Normally, when interest rates go up, then normally the currency should go. So that's go with it. So that's why basically we're looking at these data releases. And of course, the job numbers is the early indication of an economy's economic health. If more people have jobs, the more people have money, more people are spending money, then of course up goes inflation, and we know central banks have to control inflation. That's why we always look at the non-farm payroll. So this is the US dollar in the run-up to the announcement there on Friday. And again, a big miss. So this is the green line. I've actually coloured mine green for the greenback. And this, by the way, is of course the momentum meter. Shows me where all the money is flowing at the moment in the currencies. You can pitch them all against each other. So you see the dollar was getting bid into the announcement and then came off pretty rapidly as the bond yields fell below 160. I'll show you that on the chart in a moment. So the dollar now is starting this week under a little bit of pressure. We have got some data out later in the week, which could be crucial in determining the next move for the dollar. That's the CPI, that's the inflation number itself. But as I say, the dollar is under pressure at the moment. We've seen the Australian dollar gaining some momentum. Commodity currencies, they've been under a little bit of pressure recently, certainly after the RBA said they're not going to be moving rates until 2024. And the Australian dollar has been under a bit of pressure. But now we're seeing some signs of growth coming into the Australian currency. Signs of strength. So we're looking at maybe taking some long trades this week, maybe with the Australian dollar bias to the long side. The purple line here, that's the Canadian dollar. Canadian dollar also missed their job numbers as well. Actually, unemployment is rising there in Canada as well. So the Canadian dollar has come under a bit of pressure, although the Canadian Central Bank, Bank of Canada, has already started to ease back on the asset purchasing, which basically is a reason why the CAD was reasonably strong beforehand. But now the CAD is under pressure against some of these currencies, and of course we've got the euro down there pretty weak as well. Let's have a quick look at what we're looking at this week. So this week we are looking at a potential long trade in the UK FTSE with a level that we've eyed here at 71.55. We're seeing a bit of a strong momentum now creeping back into the risk assets, and the FTSE is one of those as well. Also looking at the pound against the Japanese yen. We've broken through some key structural support in pound against the yen. I'll show you that on the chart as well in a moment. And now we're looking at a potential move all the way down to 153.60 on the 4-hour chart. Certainly you're seeing a series of lower highs as every rally seems to be met with some resistance. So we're keeping an eye on the pound yen, potentially lower. I'm also looking at Aussie CAD. I've just shown you there on the momentum meter. Aussie is showing some strength, getting some momentum behind that, and the Canadian dollar is under pressure. So looking at potentially buying the Australian and selling the CAD for those reasons. And Max is looking at a gold short trade today. Gold short, basically expecting a bit of strength coming back into the US dollar, having had those numbers last week. And of course, if the dollar does get stronger, then you're going to see the gold price against the US dollar come under it a little bit. So that's basically Max's call, looking at a short of the precious metal gold. Right, let's now jump onto the screens and we'll look at what's up for this week. Okay, so this chart shows us the US 10-year government bond yield. Now you can see here, just before the announcement on Friday of the jobs release, bond yields were trading around the 1.63 level. Then the announcement came out showing a big miss in terms of the expected numbers of new jobs created, and the bond yields collapsed, dropped from 1.63 all the way down to 1.55. Now, bond yields are a good indication of where the currency should follow. Normally, higher rates means higher currency. So, with the bond yields under pressure last week and beginning of this week, the US dollar is under pressure as well. So this big drop basically was mirrored by looking at the dollar as well. This is a chart showing the dollar index, the DXY, which is basically the dollar pitched against 6 of the main currencies. The euro is the biggest component in here, which accounts for about 2/3 of the index. But you can see here that the US dollar came under big pressure as those bond yields fell through 160 as those job numbers were released. So we need to keep an eye on the bond yields, and then we can maybe have clues on where the currency should be going. As I say, this week we've got some data out later on in the week, CPI, which is Consumer Price Index. That could be the catalyst for another leg lower if indeed those inflation numbers miss. More about that in a second when we get on to the economic calendar. Okay, so this chart shows us the British pound against the Japanese yen. You can see here by looking just broadly speaking that the pound has been pretty strong against the Japanese yen now for the last couple of months, really, almost since the end of April. We've been on this tear after this consolidation period. What's happened now is we've broken up higher and found some resistance. And every pullback that you've seen, the failure to make a new high gives us a good warning sign that this currency pair potentially wants to come back and challenge this support zone back down there at the 153.20 level. So this is bearish price action here, right here at the moment. We're going to keep an eye on this one for potential trades to the downside, obviously following our strategies that we teach and trade inside the trading room. But basically, that is our bias for this currency pair at the moment. And finally, we'll take a quick look here at the Australian dollar against the Canadian dollar. Okay, so both of these are reasonably correlated currencies. This has been a bit of a support zone that we've been watching down here at around the 92 sort of 50 level. To the tail end of last week, we put in this like a bullish engulfing pattern, which is one of the strategies that we teach. We're looking for these at support and resistance. So this pattern in here gives us a potential warning sign that this currency pair now has respected that support and is now likely to trade back on itself. As I said a moment ago, the Australian dollar has been particularly weak since the recent RBA, but now that does seem to be fading, and we are seeing some momentum now pushing back into the Australian dollar. And of course, we've got pretty poor numbers out of Canada last week as well in terms of job numbers as well, which is weighing pressure on the Canadian dollar. So buying the Australian dollar and selling the CAD is something that we're also looking at the moment. Of course, don't trade that blindly. Make sure you trade a strategy. And of course, we teach our strategies as well. If you're interested, you can always come over and learn more about them. But don't just trade blindly on the back of a bias. That is not the way that you should be trading the markets. Let's have a quick look now at the economic calendar for the week ahead. Okay, this is our forexsignals.com economic calendar. You can access this at the bottom of the page. You scroll through down to the bottom, it says economic calendar. I think it's very important if you're trading the financial markets, forex markets or what have you, that you have one of these to hand, just to make sure, even if you're not trading the news, that you don't get caught out by an unexpected news event. Last thing you want to do is take a position, big announcements to be made, and you're stopped out before you've even had a chance to book the trade. So it's always good to be aware. And the way to read these is, now if you look down on the right hand side of the screen here, you'll see this colour code. Red means it's high impact news. It's likely to have a larger impact on the relevant currencies in that release. And obviously anything with green is low impact news. It's not likely to have too much of an impact on the currencies. As like most weeks, normally following on from non-farm payroll, the calendar is normally quite light. It's quite light this week. A couple of things going on I want to talk about. First of all, we've got the Bank of Canada rate decision in a couple of days' time. So that's on the 9th. You'll see here that they're not expected to move interest rates, keeping them at 0.25. But what's important, of course, is always the bank statement following on from the news of rates. Basically, the statement gives us clues on what the central bank is thinking. It also talks about asset purchasing programs. As you may know, the Bank of Canada has begun reducing its asset purchasing. That's basically known as tapering, which has basically put some upward pressure on the Canadian dollar more recently. Of course, last week's numbers are showing that the CAD now under a bit of pressure. But we'll be looking for clues in the statement following on from that to see to the level that they are going to continue with their bond buying program. Okay, and later on in the week, we've got the ECB. Now, ECB stands for European Central Bank. It's the same thing. It's the central bank making decision on rates. Now, they're not expected to move interest rates. They're going to keep them here, as you see, at negative 0.5. But again, the follow-on statement is the most important part of this, and obviously press conference as well. Now, there is talk out there from some of the analysts that they're going to be maybe mentioning maybe a realignment of their bond buying. Maybe they're going to start easing back on their bond buying. There is talk about that. If that does indeed happen and they're starting to mention that, then of course the euro is going to come under some buying pressure as well. And if the dollar maintains its weakness that we're seeing at the moment, then you could see the euro dollar push up to new highs. So we're keeping an eye very closely on the European Central Bank later on in the week. And of course here you'll see here we've got the all-important inflation data out of the US on the same day. Consumer Price Index basically tells us what is happening to prices. And as you know, the central banks have to look at inflation and have to control inflation. That's one of their dual mandates that they have to monitor. They're going for up 0.4. Again, if this is a big miss to the downside, then you can expect to see those bond yields fall, and you can expect to see the US dollar follow suit as well. So all eyes will be on the ECB and of course the CPI later on in the week. That's about it really for the week in terms of economic news. Bit of stuff out of the UK, but nothing really too spectacular, low impact as you can see there. As I say, it's really important, I think, that you're aware of what is going on, what is going to be released, so you don't get caught out. But also there are some money making opportunities as well, which we talk about in our live streams. Okay, so there you go. Hopefully you found that useful, insightful. Lots to play for this week, certainly in the euro as well. Now, we are streaming live around the clock. We do stream up to 6 times a day, 5 days a week, giving you insights to what is going on in the markets at that moment in time, with market analysis and so forth. You can take part if you wish to. Just go to the description tab below and hit the link there. It'll take you to where you need to go. I think you can take out the 7-day free trial to see what it's all about. You can interact with me and my fellow mentors in there as well. If that's not your thing, that's not a problem. I'll see you next week. Have a good week.